Hello, property nomads. Hope you're well. We've been speaking for a while on both the YouTube channel and the podcast that economic conditions are not favorable and that things are going to take a turn for the worse. And quite recently, that's exactly what we're starting to see in the markets with a big bunch of data that has come out. Before we get into the article via the Daily Mail via msn.com, just to let you know that our friends at Progressive Property are running a 3-day multiple streams of property income event. It's their flagship event. Aaron and I have been to quite a few over the last few years. It is absolutely fantastic for networking. It's a great refresher if you've forgotten a few things here and there. And it's also wonderful if you're just getting started in property. It's completely free to attend. It will be at Progressive Properties headquarters, which is up in Peterborough, which is about an hour's drive or train north of London. Highly recommend you get along to it. The link to sign up is in the description below. Completely free to attend. We urge that you go and do it and enjoy and dive into the world of property. So government borrowing costs soar and turmoil on global bond markets. So it's quite a quick video, but in a nutshell, big stock markets are down. So in the USA, Dow Jones, S&P 500, both down by more than 1% in the last few days. Tech-heavy NASDAQ down by 2%. But close to home in the UK, yields on 30-year government bonds, they're continuing to rise. That's not a good sign for long-term perspective. Yields on shorter-dated UK bonds also climbed. The FTSE fell by 0.5%. Now, the FTSE isn't, it's not quite like the Dow Jones, as in the amount of trading on it is not as heavy as is the Dow Jones, but to fall by 0.5% is not good at all. It was the same in Europe as well. People basically just selling off a lot of bonds. The main action was in the US, sparked by stronger than expected job vacancy figures. Also, what is not going to help is, I believe it was the House Representative McCarthy, whether he's a senator, I don't know. I don't get involved in that aspect too much. He's been forced out by both the Democrats and the Republicans, which isn't a good thing. The US has a big issue on their hands. Their debt clock is out of control, basically. And the only way that they can get out of that hole is either print more or just reset. And that's going to be very interesting moving forward. This is why we always say that we're not independent financial advisors. We can't tell you what to do. We would urge you to do your own research in things like gold, silver, buy the physical stuff, potentially for whatever reasons you decide you want to buy it. We would urge that you at least take the time to do some research as well. Get back to the UK, rates are seen less likely to climb again, given growing signs of economic weakness. I mean, we've had signs of economic weakness for about 2 years at the time of recording this video, so I'm not surprised. That disparity sent the pound lower at the time of recording, dipping just below $1.21 for a pound. That's its lowest level in nearly 7 months. I'm in Mexico and I'm fuming still at both two things. Number one, how relatively strong the peso is, Mexican peso, and how weak the pound is, purely because it's making things, whilst still comparably cheap to the UK. Last time I was here, it was 26, 27 pesos to a pound. So when you put it like that, and it's gone down to about 21, 22 pesos to a pound, things have got a bit more expensive. So it's a pain in the backside. I guess you can't have everything in life. So pound down against the dollar. The latest figures out are not very good. And again, these are things that we've been saying for a very long time on both the YouTube channel and the podcast. Basically, watch this space. We know what issues we've got in the UK, and we also know that we are so far down the road of no return, that things are just going to get a lot worse before they get a lot better. Imagine possibly it could get a lot worse in the USA, but we shall see. What isn't helping, things like energy policies, turning our back on Russia and Russia's natural resources. Now, I know there's people listening to this that will argue about war in Ukraine and all that sort of stuff. At the end of the day, there's a few rabbit holes to go down there. We're not going to do that on this video. The government response to the pandemic in the last 3 years, and then their response to Russia as well, and their overall energy policy is already wreaking havoc, and it's going to wreak a lot more havoc moving forward. We've had a first wave of inflation that's sort of been and gone. We're now entering a second wave of inflation. Chances are we might have a third wave of inflation in due course. And again, the seeds have already been sown. It is what it is. And that's why we go back to what we say, that you need to protect yourselves as best as possible. Have your multiple streams of income, whether that's all in property or you've got things like trading or dividends coming through shares, whatever it might be. We're not IFAs. We can't tell you to go and do this. There are always options out there. There's always opportunity out there. It's up to you to go out and really find them. But in a nutshell, government borrowing costs soar. Interest rates are going to remain high for quite a while. Anyone that tells you otherwise, I think, is a bit of a fool. And things are going to get a lot worse before they get better. As mentioned at the start of the show, do go ahead and go to that event at Progressive Property, Friday the 20th to Sunday the 22nd of October. In the meanwhile, head across to the podcast, iTunes, Spotify, etc. Go and subscribe. That would be fantastic. And use that bell notification thing to subscribe to the YouTube channel. Get notifications as and when we produce new content. Our aim of this is to grow the channel, to fight back against a mainstream narrative, and to bring you as much truthful information as we can, an alternative approach to mainstream media. So the more that we share content and the more that you share content for us as well, that really helps us moving forward. So thank you in advance for sharing. Enjoy the Progressive event and see you in the next video.